All right, so let's get right into it. We're talking about Teradyne today, a real giant in the semiconductor world. And its stock, it's been on an absolutely incredible, just parabolic run. So today we're going to try and decode what is actually driving this wild performance. And when I say incredible run, I really, really mean it. I mean, just look at this. Over the last 5 years, Teradyne didn't just beat the NASDAQ, it absolutely crushed it. We're talking more than doubled its return. 142% gain. Yeah, that's the kind of thing that makes you stop and ask, what is going on here? And that brings us right to the heart of the matter, doesn't it? Is this amazing stock performance actually backed up by a rock-solid business? Or is this just a case of market hype, a bit of euphoria? Well, that's exactly what we're going to figure out. Watching a run like this is just incredible. And hey, if you want us to break down more high-flying stocks just like this one, it would be awesome if you hit that subscribe button. That way, you won't miss out on the next deep dive. Okay, so to really get to the bottom of this, we've got to pop the hood and see what's really going on with the engine. We need to dig into the company's financials, the fundamentals. The big question is, are the numbers actually as good as the stock chart looks? All right, first up, let's look at this number, 58.2%. Any idea what that could be? Because this is one of the most important numbers for any business, and it tells us a whole lot about what's happening here. So, that number, that's Teradyne's projected gross margin. And what's really amazing here is just how stable it is. I mean, look at that chart. We're talking about the semiconductor industry, which is known for its crazy ups and downs, right? But their margins, they've barely moved, just hanging out in this super tight range. That is what you call an economic moat. It's proof they have serious pricing power. Okay, ready for another one? Here it is, 82.15%. Now this one's a little more in the weeds, but trust me, it's a huge sign of a high-quality company. It's the kind of thing that makes Wall Street sit up and pay attention. So what is this? It's a metric called quality of earnings, and it basically shows us that their profits are real. For every single dollar of profit they report on paper, over 82 cents of it is actual, real cash flowing into the business. We're not talking about some clever accounting tricks here. This is cold, hard cash. And that, my friends, is the sign of a very healthy business. And now let's talk about the balance sheet. Honestly, there's only one word for it: a fortress. I mean, look at this. Their debt is incredibly low. Their interest payments are practically nothing. This company is built to withstand pretty much any economic storm you can throw at it. It just screams that management knows exactly what they're doing and they're not taking any crazy risks. So the evidence is pretty compelling, right? The fundamentals look amazing. What do you think so far? Let me know down in the comments. And hey, if you're finding this useful, do me a favor and smash that like button. It really helps out. All right, so we've established the business is absolutely rock solid. But that still leaves the other half of our question, right? Why is the market willing to pay such a massive price for it? What does Wall Street think is coming down the pipe? Well, here's a massive clue. Just look at how much they're pouring back into research and development. Think about it. In 2023, when the rest of the industry was kind of slowing down, Teradyne actually sped up their spending. They're plowing almost 16% of their revenue back into R&D to make sure they stay ahead of the competition. The market sees that, and they're basically paying up today for the dominance they expect tomorrow. And it's not just about ideas and research either. They're putting their money where their mouth is by building out their physical operations. Capital spending has been going up and up and up every single year. They are literally building the foundation, the factories, to handle the huge wave of demand they believe is right around the corner. Okay, so far the story sounds almost perfect, doesn't it? But, a good analysis has to look at both sides of the story. We can't just ignore the risks. So let's flip the coin over and talk about the bear case. What are the critics worried about? So just to recap the bull case, you've got amazing margins, a balance sheet that's a fortress, and huge R&D spending to keep them on top. It's a beautiful picture. But there's always a but, isn't there? The reality for the bears is pretty stark, and it all comes down to two things: the price tag and the cash. And this right here, this is the core of the bear argument. A PE ratio of almost 79. Let's just say that is not cheap. It means the stock is priced for absolute, total perfection. For this price to make any sense, the company can't just grow, it has to grow flawlessly, without a single misstep. There was literally no room for error. Okay, so we've looked under the hood at the fundamentals, we've seen the bull case for future growth, and we've heard the bear case about the crazy valuation. It's time to bring it all home and come to a final verdict.
First, let's talk about the business, just the business itself. And honestly, there's no two ways about it. Teradyne is an elite company. It is a highly profitable, brilliantly managed machine that is just navigating a tough industry with incredible skill. A plus. But then you have to look at the stock. And with a run like it's had and a PE ratio in the stratosphere, well, the secret's out. The market knows this is a great business. In fact, you could argue the price already reflects a future where absolutely nothing goes wrong. So that brings us to the big takeaway here. What you have with Teradyne is a fantastic, world-class company, but it comes at a very, very premium price. If you're buying the stock today, you're not getting a deal. You're making a bet and paying a hefty price now for growth that you hope will happen tomorrow. So that's my take. But now I want to hear from you. What company should we break down next? Seriously, drop your suggestions in the comments. We read every single one, and we're always looking for ideas for the next deep dive.
And I'll just leave you with this final question to chew on. When you find a truly great business, a company that is just firing on all cylinders like Teradyne, is there any price that's too high to pay for that kind of quality? It's the classic question for investors, and there's no easy answer. Thanks for joining me on this one.